Welcome back, everyone. What a great day we've had here at the Emerging Growth Conference, and let's continue. Next, we have Mammoth Resources Corp. It trades on the OTC Pink sheets under the symbol MMMRF and on the TSXV under the symbol MTH. It is a precious mineral exploration company focused on acquiring and defining precious metal resources in Mexico and other attractive mining-friendly jurisdictions in the Americas. The company holds an interest in the 5,333-hectare Tenoriba gold property located in the Sierra Madre precious metal belt in southwestern Chihuahua State of Mexico. Please welcome its president and CEO, Thomas Atkins. Welcome, Thomas.
Thank you, Anna, and thank you for those that are attending. It's a great privilege to be here and to be able to present Mammoth to you. I'm going to start out with a couple of little housekeeping things. Forward-looking statement. I'm not going to show a forward-looking statement. It's on our website. It's on every press release, and no one's going to read it right now anyway. So we'll just skip with that. The other one is, well, here, I'll switch to the first slide. So I'm going to tell you about our Tenoriba property, a little bit about Mammoth Corporate, and I'm going to be describing our steps of exploration. And the way that I look at exploration, I'm a geologist, MBA, and exploration to me, it's like detective work, and it's what I really enjoy about it. Like a detective uses forensics to help to solve a crime, we use science, different methods to try to understand what created the deposits that we're exploring. And so I'm going to go through and describe some of our steps and our successes and why doing some of the good groundwork that we've done has led to really high probabilities of success in defining what we believe is a really, substantial size potential deposit. One other thing is I'm going to be using metric. So for those in the US that are more accustomed to imperial, just a couple of really quick things. So a kilometer, 1.6 kilometers equals a mile, so roughly 1.5 meters a yard for the most part. When I talk about grams per ton versus ounces per ton, look at what's most relevant in this presentation is what's potentially economical. And the type of deposit that we think we have here, which is going to be an open pit and heap leach, because of how efficient that is, it's basically scooping up rock and dirt, and you put it on a pad, and you put a solution over it, and then you recover the gold actually by taking it in solution, in this dissolved solution, and you put it over carbon, which is crushed burnt coconut shells. And then you can the gold actually has a greater affinity to attract to that, and you're able to take the gold out of this carbon. So really simple process. So economic grades are kind of 0.4. Mine's being put in production right now at that grade, 0.5, 0.6, even up to a gram. So just kind of keep that in mind as they talk about grade and they talk about distances. So as Anna mentioned, we're on the TSX Venture Exchange and on the OTC. The company's primary asset is our Tenoriba property. It's 5,333 hectares, which is roughly 13 kilometers. So that's about 8 miles by about 2.5 miles in the Sierra Madre precious metal belt. We're run by a very experienced management team, 100 years between our 3 principal executives, myself, the VP Exploration, our CFO, and an independent director. We have a large, within this 5,333 hectares, we have a large 18 square kilometers. So that's roughly 6 kilometers by 3 kilometers. I don't know if this helps, but 4,500 football fields. And we're coming up to Super Bowl this weekend. Give you a sense of that, although it's hard to imagine 4,500 of them. But we have this gold footprint, and the highest sample that we've been able to sample there is actually 74 gram per ton gold. So when I was talking about 0.4, 0.5, 0.6 being economical, this is 100 times that. We completed in 2022 a 27-hole, 3,250 meter, about $1.5 million expenditure. This is the third phase of drilling on the property. A total of $6.5 million has been spent over these phases and other exploration on 54 diamond drill holes for about 7,500 meters. And the work that we've done has given us a really high probability of success. So we're exploring this giant area, and we're intersecting like tens of meters of gold, economical grade, over with 85% success. So I'll talk a little bit further about that going forward. So just a little bit on the company, 67 million basic shares outstanding. A goof here, it's not 91.5, it's actually 72.3. That's my error, fully diluted. We're held 17% by institutions and 10% by management Myself, I'm a 6% shareholder. Our VPX is 3%, and then 30% by close associates. You can see our share price performance relative to gold in red in this graph. As gold's declines, so as our share price. It's appreciated recently, yet we've not caught up with that, and that's typical for this portion of the sector. Being small cap exploration, we generally don't appreciate as quickly as the price of gold, but we do catch up. Our last financing was done actually around prices similar to this at 14 cents a share. That gave us a market cap of over 9 million. We raised about $3 million on that financing. Our recent market cap at 3.5 cents is only 2.3 million. And that's actually about a third of the 6.5 million that's been spent on the property. So we're not even getting full valuation for what's been spent on the property. And yet we're having these great drill results. We get this huge area, like all these other attributes, and it's not yet being recognized in the market, given the way gold has produced over the past couple of years. So going to the next slide. So here's where we're located in this prolific belt, the Sierra Madre. So this shaded area in red and all the stars are some of the other deposits that have been found in this area. So in the past 20 years, this is to 2015, 40 million ounces of gold equivalent, so that's gold plus silver, have been discovered in this area. And that's $72 billion worth of gold at today's prices. The list of some of the deposits and the companies that own them, quite literally, we're surrounded by multi-million ounce deposits owned by some of the largest market cap companies in the world. This is zooming in on the property, so you can see our concessions that comprises 5,300 hectares over this strike length of roughly 8 miles by 2.5 miles. And the area circled in the middle, that's the area of our known mineralization. Still open in all directions, but this is the area where we focus most of our attention. And really, look at this is a big area, as I'll demonstrate later. It's a high sulfidation deposit. Now, that's not going to mean a lot to a lot of people in that. The source of these are porphyry systems, porphyry copper with gold, porphyry gold with copper, deeper in the systems. And it's interesting because if you go from the eastern portion of this 6-kilometer trend, where we're higher in elevation, and you go to the west where you drop down about 600 meters, we get deeper in the system and we are getting copper. So there is that potential as well as the gold and silver. These high sulfidation systems in this belt, 3 examples of mines that are in production or were in production is the Mulatos mine at 6.2 million ounces of gold, La India at 2 million ounces of gold resources, and El Sazela at 1.8 million ounces. So these are our brothers as far as the type of deposit. I'm talking high sulfidation. It's just been confirmed by an independent PhD geologist that reviewed all of our historic data, was on the property, saw the rocks, and made this conclusion. So, we're not just drinking our own Kool-Aid here. A little bit on the history. We actually acquired the property after it had seen its first modern day exploration in 2007, 2008 by a predecessor. Their transaction was to acquire 100% on the payment of $2.5 million over 4 years. Global financial crisis came in 2008, not a chance of meeting those commitments, and so the property was returned to the vendors. We picked it up in 2012. They owed $65,000 US in back taxes, and we're going to lose the property when we were introduced to it. Our deal was, because we've earned 100%, was $200,000 over 5 years, plus $1 million of expenditure into the property. What we walked into from our predecessor's work, and this is a map, and pretty colors, but the red is the higher grade of gold in soil. So they sampled on a grid, 100-meter spacing. They sampled on a grid, and they literally took just samples of the soil, of the dirt, and analyzed it for gold. And what's interesting is those red colors are actually potentially economic grades. They're 0.2 gram per ton gold, which would be within an open pit mine in a open pit heap leach setting, which we believe Tenoriba has the potential to be. And so you can see over this 5-kilometer by 3-kilometer trend, all of this higher grade material. This is what really excited us about it. Then they went in, they did some initial drilling. So the first 15 drill holes ever drilled in the property. And I've shaded in yellow the trends of where they had some good success in their drilling, and a couple of examples, or a few examples of some of their drill holes. So first drilling ever done, had done that soil geochem work, some mapping. They ended up being successful in 10 of 15 drill holes. Their highest grade was almost 2 meters of 46 gram per ton gold. So that's 100 times higher grade than what potentially could be economical in an open pit mine. You can see some of the other interval widths, 11.5 meters, 34, 66 meters. So, I mean, terrific results. And again, this is what excited us and why we jumped on this property as quickly as we did on the terms that we got as well. One of the first things we did, because I talked about this lower cost method of recovering the gold, is we did some metallurgical test work on their drill core. So we actually took some samples and we sent them out for analysis. And what was illustrated was that the gold occurs as free gold. So you can see the yellow circles. That is free gold. And what that means is it's got a really high likelihood of being amenable to this low cost heap leach processing. So that was one of the first things we did with their work as we got into our exploration. The next thing we did is we went out and we sampled. We took over 600 chip samples, and they're about 1.5 meters, so about 1.5 yards, 4 feet-ish or so. And we sampled throughout about a 6-kilometer trend. So each of the little fine squares that you see in this are 2 kilometers. So roughly, about 1.25 miles. And this is over about a 6-7 kilometer trend. The red is really high grade stuff. This is like 10 to 75 gram per ton gold. And so you can see the distribution of this higher grade. The black circles in the middle, that's where our predecessor had done their drilling. So you can see the potential on either side of where they had drilled from our work. The next thing we did is we went in, we went to the largest areas of rock, of outcrop, and we cut channels. So you can see in the image to the left, they're sawing these channels, and then the image below it, they're actually chipping away. And we took regular 1.5 meter samples along these lengths to get confidence. And this, you can see in the map the distribution. So really covering a good 4 or 5 kilometers of this trend. Again, in the largest areas where we had solid rock. And these are the results from that. So, you can see I've highlighted in red some of the better intervals. There's 15.5 meters of over 1 gram, down below that 13.5 of 1.55. We had a couple that didn't make it. But on average, even including the ones that didn't make it, 151 meters of total of these lengthy channels, grading 0.66 gram per ton gold. And if we took out the 2 stinkers, 129 meters of almost 0.8. And again, putting that in the context of the 0.4 to 0.6 gram per ton gold as being economical in these type of settings, some really great results. So again, enhancing our confidence of the deposit, its size, and the kind of grades that you could expect. So the next thing we did is we went and did some geophysics. Now, we only covered 40% of the trend. And the reason was we didn't know for sure that it would work. What geophysics does is it allows you some sense of what's going on in the subsurface by different characteristics and different measurements without going into a lot of detail on how it works. We only covered the 40% because we didn't know it was going to work. But the advantage that we had is we could run it over the areas where our predecessor had drilled. So we knew they had good results. We could do the geophysics over that. And in a sense, it would help us to calibrate its effectiveness. And we got some good results. And these are all a bunch of pretty colors and things. And without me getting into the detail of how they work, we had a number of zones that looked particularly attractive from this initial survey. So this next map shows the distribution of our drill holes. So those are the ones that are labeled in blue over this trend and superimposed over where we had our chip samples, just to give a sense of how we drilled relative to where we were getting the good grades. And 8 of the 11 holes that we tested hit potentially economic gold over tens of meters. So really terrific success in our first drilling, testing all of the science that we had used to help targeting these drill holes. And you can see some of these results. So in the area Moreno, which was to the left of the maps that I've been illustrating, this is in the lower elevation where I talked about maybe the potential of copper. There's a 40-meter interval of almost 0.8, and you can see below that 7.2 meters, including 3.6 of copper. So again, we're starting to see this copper porphyry potential deeper in the system. In the central area, we did some step outs from our predecessors' drilling. You can see a number of intervals highlighted in red. There's one there, 23.5 of 1.32. And then in the Carnaritos area, this is area to the right, a really large area, about 1.5 kilometers by about 0.5 kilometer. So again, in miles, about a mile by about 1/3 of a mile in size. best interval, 127 meters. So we're talking like a football field plus both end zones of 0.52. Good economic grade, including 58 meters of 0.8 if we narrowed it down, or 25 of 1.21. So some terrific results in our first drilling on the property, testing all of our science. So we were dormant for a couple of years because gold price sank to $1,200 an ounce. It was really difficult to raise money. We didn't want to dilute shareholders, so we just kind of sat tight. But in 2020, late 2020, 2021, as the gold price started to improve, we got active again. And the first thing we did is we did that PhD review, which I made reference to earlier. And so the couple of PhD geologists were involved in it, third-party, reputable firm. Their conclusions were Tenoriba is a high-quality, early to mid-stage exploration project with potential to host an economic, high-sulfidation epithermal deposit. What we believed, but we wanted it validated, and we wanted to have the thoughts of these PhDs with lots of experience in these deposits. We went back in and we did the infilling of that geophysics. So we covered the 60% that we didn't cover in our first pass, so we'd have the whole picture. We extended the gold in soil, so we went a kilometer further west, got some great samples in that, 0.7 gram per ton gold. And again, when I talk about 0.4, 0.5, 0.6 as being potentially economical, we got 0.7 again, just in dirt, like just in dirt. And from that, we targeted our third phase of drilling. So part of that targeting was we actually went out to a third party, independent, these geophysical consultants, and we had them do some 3D modeling, including all of our data to help us find the best targets. And so what we generated was this map, and I'm not going to get all to the nuances of it, but if you can look at it, you can see like TA2, TA3. These are target areas. So we've identified these target areas from all of this science over this 4 to 6 kilometer trend in the area Moreno, which is to the west. This Masoparia is the area in the middle, and I've shaded the areas where our predecessor and some of our drilling has started to expand on, lengthy trends within that area, and then this large Condoritos area to the east. And Ryan, I'll queue up as the next slide, please. I'll queue up that short video, which shows the 3D modeling, please. Yeah, so you can see the 3D modeling. I just want to point out one thing. So the areas that we're targeting, the areas that are sort of that pink-red area. And what's interesting about it is if you look at it, it kind of looks like, well, look at it. It looks like an ultrasound of a fetus, right? But the interesting thing is where it's sort of rounded, which you would say, well, that's the infant's back or the fetus's back. It doesn't mean that that attractive feature that we're targeting is dissipating. It's just that that's the limit of the effectiveness of the surface geophysical survey. And so that likely continues. So I just want to point that out when you looked at that modeling. And again, that's available on our website. So you can see that on our website. So this next slide, in the green box areas, those are the locations of the drill holes of our 27-hole, 3,300 meter program. And you can see their distribution over this 4 kilometer trend and in the different project areas. Then going to our next slide. Would you please cue this video as well, Ryan? so in that video, you got to see the terrain that I made reference to. And so what we see when we first enter that sort of flyover is that lower topographic, that Moreno area where we're getting the copper. And you can see as we rise up to higher elevation, some of the other drill holes. And so you get a sense of the size and you see the distribution of our drill holes. And what I'm illustrating here are just some select results from this drilling in the different areas. So the area to the right or to the east, this Carnaritos, you can see in red 37.5 meters of 0.53, 43.5 meters of 0.59. There's one down there, 85.7 meters of 0.47. And then the Masoparia, that's the central area where our predecessor initially drilled. There's a 39 meter of 1.22. And then the Moreno area, this is where the copper was occurring, 37.5 meters of 1.18. And there's an 18 meter interval where we're getting, over 0.5% of copper in addition to the gold as well. So, great results. And what's really impressive is of all of our drilling, and these are big step outs, like we're not drilling in one location, having success, and then we move over like 25 meters. No, we're going over like 200 meters because we're blocking off the big areas, not trying to define specific little areas. We're just testing like really big areas to see if there's continuity and we can continue to get mineralization. Where we missed, where we were beyond our 85% success this year, we still had some good values of gold, but these were big step outs in areas. I mean, we were out like a kilometer, 800 meters from previous drilling. So just testing new areas. So anyway, terrific success. And here's what it kind of boils down to is that, look at what I'm showing in this image here is I'm showing these three other deposits we've made reference to, Sazelle, La India, and Mulattoes. And I'm showing the size of their pits. So this is from their feasibility studies. It's the outline at the surface of their open pits. Now remember, open pits go in a V. So what's shown at the surface when they're trying to get mineralization further down is large. I mean, it's far beyond pure mineralization, but it's the best information we have. It's being generous to their size. But I'm comparing the size of their footprint from their mines with millions of ounces of gold to the size of what we have as our footprint on our project. And so you can see there, Carnaritos, the Masoparia central area, and Moreno, we're starting to identify trends from our drilling where we can string together successful drill holes. And, we're comparing ourselves at a larger footprint to all of these other guys. And you have Sazelle at 1.8 million ounces, La India, which is our closest rival because they're 0.65 gram per ton gold at over 1 million ounces at this time, or near 1 million ounces at this time. And then Mulattoes, again, higher grade. But also remember, higher grade, when they did their evaluation this many years ago, 2004, Mulattoes, for example, the grade at that, or the gold price at that time was, and their study was done at $350 an ounce gold. If you take that 350 and you look at 1800 now, their grade is, by comparison, is very similar to ours. So you can see our footprint in these others of the same type of deposit as ourselves, and you can see, you see the potential for the size that we could have at Tenoriba. And so what are our next steps? Well, we've done some additional testing to determine the nature of the gold mineralization in this big Carnaritos area, confirming that it could be recoverable in this heap leach type setting. So we'll be announcing the results of that shortly. We went out to a third-party independent who does resource calculations, mineral resource calculations, and asked him what kind of spacing do we actually need in these areas based on the information that we have, so that we can go in and drill in that type of spacing to calculate our maiden gold, silver mineral resource. And so we'll be looking to announce those results as they come in. And then what we intend to do is we're going to wrap all of this stuff into an in-house technical report. That'll post that on our website, and that'll include all these technical studies, all our drill results, with conclusions and recommendations for future work. So that's also in the works right now. And we're making, and following that, we'll be making preparations, citing drill locations, doing some mapping to assure details of where we're drilling, to come out with and drill our maiden resource definition drilling. And we would expect it to be in the neighborhood of 50 to 60 drill holes. We're kind of probably going to go to a depth of 80 to 100 meters because, look, it's open pit. So we don't need to define, 200 meters of stuff because we're going to take the first 80 to 100 meters anyway. And so we're going to go out and we'll go out and we'll drill that. And we figure 50 to 60 holes. And we should be able to come out with a maiden resource. We'll probably do that in the Carneritos area because it's the largest area with still lots of potential in the Masopari area in the middle and the Moreno area in the end. So hopefully that gives you a sense of where we're headed and what we've been able to achieve. And I'll turn it over to Anna for some questions.
Great job, Thomas. Lots of stuff going on there. All right, for the sake of time, let's talk a little bit about your next steps to advance this project to demonstrate you have a deposit of similar size as all the others. You mentioned a lot of the multi-million ounce deposits. So can you tell us about next steps?
Yeah, well, so first we're defining confirming the metallurgy, that it's amenable to this heap leaching, because that's important because it's going to define sort of what grade is economical. This fellow that we went out to, this consultant on the resource, so he's giving our spacings, and that we'll do our work to identify and locate where we're into the drill relative to his work, suggesting the spacing that we need. And then, yeah, we'll hope to raise the funds to go out and to do that drilling. I think it's a pretty compelling story, at that stage when we have all this information and based on the success that we had. I think else what's interesting about it is this is really, this is a really opportune time. We did a lot of work before that, but, we didn't have, for example, 85% success rate in all of our drilling and that, but we've been able to demonstrate that we can produce those type of results, and we've been able to demonstrate the size potential. And so to now go in, knowing that this is the kind of drill spacing you need, and to be able to go in and hopefully have the same type of success using the same tools we've used in the past that gave us the success that we've been able to achieve, I think it's a really opportune time to be able to define a resource. It's huge leverage for shareholders, once we achieve that success.
Great. And you also mentioned the low-cost open pit and heap leach gold processing as a possible scenario of the exploitation of this deposit. So what gives you confidence that these methods are possible at your project? Yeah,
well, look, for the open pit aspect of it is there's so much gold on surface. So that's a no-brainer, right? Because, we're sampling it everywhere. There's not an issue of that. So you can dig a shovel anywhere you can get gold. So that's and then as far as the heap leach, well, we've done some of the metallurgical work. That one slide that I showed that showed the free gold and the microscope work. That's an illustration of that. And we'll continue to do that work. But so far, everything's been pointing us in that direction. So we feel quite confident about that.
And Thomas, why do you think you have the valuation you have today?
Well, look, the whole sector got beaten up. That's for sure. Gold declined. We went from over $2,000 an ounce down to $1,600 an ounce. So that's going to beat up the whole sector. And of course, the techs and the other stocks were doing better. So look we got lots of company as far as the decline from sort of where we were back when we did our last financing to where we are now. So that's not different than anybody else. It's just what happens in a cyclical sector, and it's particularly magnified when you're in the smaller cap end of that. But we've ridden these trends. We've been doing this with this company for almost 11 years. So we've ridden these trends, and we've been able to survive the last 11 years and prosper. And so I feel we'll be in a similar situation in the near future.
So what do you think is a reasonable valuation for your company, given where you are?
Yeah, well, it's interesting. We defined this resource, and then let's just be conservative. Let's say we're somewhere in the neighborhood of $500,000 to $600,000, just in one portion of our deposit. Now, generally speaking, the market ascribes $25 to $50 an ounce of resource, and so that would take somewhere in the middle at $35 an ounce. If you take that 500,000 ounces, that's 35 US. We're Canadian. Take our shares. I'll say we got 100 million shares outstanding. That converts to about a 25 to 30 cent share price. And that with that initial resource, and we're probably going to be defining those initial ounces just in that Carneritos area, because we see that as being the biggest area of easiest potential to define. We're able to define that, with this next round of financing that we would do in these 50 to 60 drill holes, and we still have the Masopari area, we still have that Moreno area, and it's still open in either direction. Look at there's great potential, and so. That's where I think we can get to, over the next, say, 12 to 18 months.
And being an industry insider, what's your view on the price of gold and its future?
Well, look, certainly it's done well. It's kind of interesting. We were up to almost, pushing on $2,000 an ounce only a week or so ago before the last Fed meeting. But I wasn't really surprised to see it pull back a little bit, because I believe that you look at, I think the Fed's been pretty transparent, but everyone's betting against the Fed. Oh, he's going to change and stuff like that. Well, I think he kind of did what he said he was going to do, and so it's pulled back a little bit. There's a bit of a knee-jerk reaction, but we're starting to see it start to climb up and up and up again. And I think it's going to, I think a lot of people, myself included, believe that we'll be pushing past $2,000 an ounce and beyond. I'm not one of these guys that are going to say it's $40,000 an ounce, but I do think we've got good potential for seeing $2,000 an ounce and better over the next, say 3-6 months and beyond.
We have some more questions. Let's see if we can get through them quickly. Mike J. wants you to talk about infrastructure on the Tenoriba property, roads, power, et cetera.
Great question, Mike. And sorry, just running through things quickly. I didn't mention that. So look, we can drive to the property from any direction, north, south, east, west, just using the roads that sort of, cut in and around the hilly area for subsistence farmers and their houses. But within about 20 minutes of our campsite and our core storage, there's a little fixed wing landing strip. So we actually can fly into the property as well. So access is great. There's a power line that runs along the southern border that serves a few communities. Like, it's probably not sufficient power that you can put in a mine, but the fact is the line is in, and that. So yeah, infrastructure is good, but we don't have to move a big community. So that's the other part of it. We get good infrastructure, but we're not having to move a big town site or something of that nature. So yeah, good question. And
Jack asks if you can give some details on your rights to the property.
100%. So we've got 100%. We earned 100%, subject to a royalty, which is $1.5 million, it's a royalty on production, 1.5%, but we can buy it for $1.5 million 4 years into production. So it's pretty inexpensive.
And Cora Vaughn wants to know, what is a low-cost processing due to your production costs, and are other majors using that?
Yeah. So Agnico Eagle. I mean, Agnico Eagle is a $27 billion market cap company. They're like India Mine, similar type of deposit up in Hermosillo State. They're using the same type of process. And so, look, I was a CEO of a company, Castle Gold, and this is back in 2009. And we were mining 0.47 gram per ton gold at $1,000 an ounce there and making money. So, costs, I mean, look, it's hard for me to say right now, but you're seeing costs of mines similar to ourselves in these type of open pit heap leaches. You're seeing costs of around $900 an ounce with gold at $1,800. So,
all right. Brett Webster wants to know about the majors around you. Do you know the quantity they are producing?
I don't. I mean, look, there's a lot of them. So first off, I can't say for sure, and they're all different. I mean, I gave that list. I mean, look, I list like 12, 15. I mean, there are a lot, and they all have different amounts. Gosh, I would be a long question to answer, so I can't say that. But they're in the neighborhood of anywhere from 100,000 to 250,000, 300,000 ounces a year, I'd say in general.
And any chance for a joint venture with any of them?
For sure. Look, we have people visiting all the time. And that. So there's always that opportunity. It's just getting the right deal. We did have one before. I didn't get into the detail of that. We did have one before with a major Centerra Gold. It lasted for 18 months, and they chose to leave Mexico. So they were there, and they just we got on a conference call. We thought we were going to talk about drilling. They permitted it. They had drillers going in and bidding on it. We thought they were going to talk about their targets, and they said, we're leaving Mexico. You're going to get the project back. That was after 18 months, and they'd spent $1.5 million on it. So. Okay.
Well, we are out of time, but we've got more questions for you. We'll send to you so you can answer on your own time, but fascinating stuff here, Thomas. Thank you for joining us.
Anna, thank you so much. It's been a real pleasure. Take care. Have a nice day.
All right. Thank you.
And thanks for everybody attending.
Yes. Awesome. Okay. Everyone stay with us. We'll be right back.